We're sticking with the Fed. Our Steve Liesman's in Jackson Hole ahead of Powell's speech on Friday. Joins us with some results of a special edition of CNBC's Fed Survey. Hey, Steve.
Hey, Carl. Yeah, a lot to ask about here. The Fed meeting in Jackson Hole amid unprecedented presidential pressure for a rate cut and unsettled questions about the next Fed chair and, of course, tariff inflation. The survey found that respondents believe the president is most likely to pick NEC Director Kevin Hassett to replace Fed Chair Powell, but they think he should pick former Fed Governor Kevin Warsh. About 70% of respondents think Powell's speech will be neither hawkish nor dovish, but actually neutral. The 29 respondents still see 2 rate cuts coming, even while 63% believe substantial price increases remain on the way from tariffs. On who the president will pick among the 11 named candidates, Hassett leads, followed by Fed Governor Chris Waller, and then there's Warsh and former St. Louis Fed President James Bullard. But then there's the question who respondents think the president should pick, and that is led by Warsh, followed closely by Waller and Bullard. Hassett, in that question, drops to 4th. 41% of respondents say the next Fed chair will conduct policy independently of the president, but 37% say it will be in coordination. 22% are unsure. Those are some pretty dramatic numbers right there. Meanwhile, 69% say Powell's speech will be neutral. 14% say dovish. 14% say may not even talk about policy or the economy at all. Here's the outlook for the funds rate. Respondents see the Fed cutting by 50 basis points this year, 25 in September, 25 in December, and 50 next year. This is despite calls for inflation to remain around 3% this year and next. So the big question, if Powell talks about the economy on the rate outlook, how does he make a case for a rate cut with inflation running a percentage point over target, and also forecast, at least by this group and others, to remain above target for this year and next? Guys, we're going to talk with Kansas City Fed President Jeff Schmidt. We'll have that tomorrow morning. And on Friday, Cleveland Fed President Beth Hammack. Back to you.
I guess he could stay neutral as he's been, Steve, which is, we're still waiting to see whether we have more inflation or whether the job market turns worse. Would that be a disappointment for the market?
I think I was just going to say that, Sarah. I was going to even ask you. I think it would be. So let's count it. 4 possibilities. He could be hawkish, he can be dovish, he could be neutral, or he could not address policy at all and talk about the long-run framework. And I think 2 of those 4 would be a disappointment to the market. Maybe if he doesn't talk about policy. I think maybe, Sarah, that Jay Powell's made a little mistake here of letting things run without him commenting. He hasn't spoken since we had that big revision, since the jobs report, hasn't spoken since the inflation report. And the markets are now kind of, if you look at the probabilities, kind of wound up for this rate cut. They're at 84% probability. I will point out there's a 16% probability of no cut. That's risen a bit. But still, he may have limited flexibility because of how much the market is wound up in favor of that cut.
Any chatter about these new Cook allegations yet, as people wake up there in Jackson Hole?
I have not. I've asked the Fed for comment, as I know folks in headquarters have as well. We're just waiting to hear if there's any comment either from Lisa Cook or the Federal Reserve about this issue.